Welcome to another episode of Equity Mates, a podcast where we explore what is possible in the world of investing. If you've just joined us for the first time, we have a huge episode for you today. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. We are joined by our returning correspondent from the front lines of of cryptocurrency disruption. We're obviously interested in this space, but I don't think either of us would profess to be experts.
No,
we kind of
punters.
We're punters. We kind of hear stories every now and then, and we're like, what is going on?
I know.
And so then when we want to dig into it and hear what is going on, we turn to the team at Bamboo, and today we're joined by the CEO of Bamboo, Blake Cassidy. Welcome back to Equity Mates.
Thank you, guys. Great to be back. It feels like a lifetime since I was here last, which I think was only about 6 or 9 months ago.
Yes.
Well,
yes.
I mean, for people who haven't heard that last episode, I still remember what you told us about then, which was there were AI agents who were being set up with Twitter accounts or access to Twitter and then trading accounts, and who were autonomously trading crypto and making
and outperforming
crazy returns.
Crazy returns.
That's right. Yep.
That's the bar. That's what we're hoping to hear.
We can lift that bar today, guys. There's always something crazy happening in the world of crypto. Yeah.
Well, let's start there. So, as Ren said, last time it was all about AI agents trading through Twitter. What's caught your attention since then?
Yeah. The first thing I'm going to shine a light on is just the price of Bitcoin and Ethereum. You know, they've reached crazy heights, 120K USD per Bitcoin. And, you know, I really think it's just getting started. So that's really exciting.
You would say that.
Oh, here we go.
That's really exciting to see. We've seen lots of adoption through institutions and new products come to market like ETFs and Bitcoin Treasury companies, which we'll get into throughout the podcast. But the wildest thing that I've seen since we last spoke is World Liberty Finance. Have you guys heard of World Liberty?
Yeah, we've been tracking it. Yeah.
So World Liberty Finance, for those that don't know, is a decentralized exchange, kind of like the ASX, but just for crypto coins. But you can also lend and borrow your crypto tokens, right? So it's like a full service kind of software platform for digital asset trading and a money market. And this one in particular is owned by the Trump family, right? And they have recently done a capital raise and raised $750 million. So the Trump family's bagged $500 million in cash. So it's just,
but isn't the value of all the coins that they own worth like $6 billion or something?
Yeah, that's right. So it just launched on September 1. There was a fully diluted market cap of $30 billion US dollars. With the Trump family, you're holding about $6 billion worth of tokens.
Yeah, President Trump was listed as co-founder emeritus.
Yes.
Baron Trump was listed as DeFi visionary.
And crazy. We were talking off air, but overnight, I think Trump Jr. also listed American Bitcoin.
Really?
And he had a stake in it now worth $1.5 billion.
Wow. So I think it just really goes to show that the Trump family has made more money in crypto in the last 8 months than they did in a lifetime of property.
Yeah.
And I think this is really pivotal. This family is now transitioning from a property family to a banking family. And they're really setting up, like pushing the legislation to support, you know, a crypto-friendly ecosystem so they can be leaders.
So they can be rich.
Let me ask you, so you were early on Bitcoin. I mean, it's all relative, but like, you know, you've been in the space for what, a decade now?
Yeah.
And like the original conception of cryptocurrency was like this decentralized, can't be inflated away by governments. You know, it was an anti-government movement to begin with. And now we're seeing the most powerful man in the world sort of centralize government control, or at least like really get government's fingers in it. We obviously saw the Genius Act, and we might talk about stablecoins a bit later. What's your view on like that shift?
Yeah, that's really interesting. So not all projects are created equally. You know, this one is highly centralized, and, you know, I would, you know, generally advise to steer clear of projects like that. But, you know, the transition from being a fully decentralized kind of idea of Bitcoin and other cryptocurrencies now needing to have rules and regulation in place for it to flourish is a big shift. I think it can only go so far living outside of the traditional financial system. Now, for it to reach its full potential, it does need to be fully integrated, and for that to happen, there does need to be some rules and regs and safeguards for consumers. Yeah.
Well, before we dive into, I guess, some of the key developments that you're sort of bringing to us today, just give us a pulse check. Give us a sense check of where the crypto industry is. You said that Bitcoin hit all-time highs and it's just off those all-time highs. So I'm sure people are feeling pretty good about that. But like, what's the mood? What's the vibe at the moment in the community?
Yeah, it's quite interesting. So this market cycle, Bitcoin and other cryptocurrencies go through these 4-year cycles, has been institutional led, right? So that means that large financial institutions like BlackRock are really driving a lot of purchasing of the asset, and other financial institutions are adopting it. And this is quite different to last cycle, where it was primarily led by retail investors, and their market behavior is very different, right? So they're jumping on exchange, they're doing market orders, they don't care how much they, send crypto around for, they'll pay $100, $200 fees.
You're saying that retail investors don't care? Or?
Yeah, retail investors don't care. They're not price sensitive with fees. They'll do crazy market behavior. But then these institutions, they might buy billions of dollars, but it'll be off market in like a dark pool or, through an OTC desk. It doesn't affect price. Yeah. So as a result, we have seen a different market structure and a different sentiment. Obviously those that have held crypto through previous market cycles have done really well, but we haven't seen that euphoria just because there's a lot more professional investors in the space. And so that's really begs the question, what's going to happen next? Previous cycles we've seen these euphoric blow off tops, like a bubble-like environment, and it's come crashing down very quickly. But this time we've seen much more steady price appreciation. Yeah. So
you're seeing like previous Bitcoin fanatics now readjusting expectation of where Bitcoin, not where it's going to sort of hit, people saying the $1 million mark or whatever it is, but like in these cycles where it's going to be going?
Yeah. So, lots of people do all sorts of framing games to help manage their positions. Lots of people come out and say $1 million Bitcoin, next year and in the next 4 years or whatever by 2030. And these things are certainly possible, but at the end of the day, no one really knows. But one interesting thing that we are seeing in this market cycle is that those that bought in very early, or a large cohort of those that bought in very early in 2010 and for $1 a Bitcoin or whatever, they're starting to let go of their positions worth tens of billions of dollars, because now there's the institutional demand for them to actually liquidate their positions and sell them in block trades. So that is quite different.
Yeah.
And then it kind of begs the question, these visionaries that have held this whole time, have made billions of dollars.
Back to fiat.
Why are they going back to fiat? Do they not believe in Bitcoin?
Well, I mean, if I'd made tens of billions of dollars in 15 years, I'd probably go buy an island or something.
That's true.
That's true.
Yeah. You could argue that a lot of their work is done. When BlackRock is believing in it and buying in it, it's like, okay, we've convinced the world.
Yeah. No, you're right. Yeah.
So one of the big themes that we've seen emerge over the last few years is the crypto treasury companies. We've spoken about it on Equity Mates. We actually just did an episode where we've seen one of the first ETH treasury companies come to market, BitMine. Michael Saylor and his company MicroStrategy, or now Strategy, were the pioneers of it. And he's sort of very vocal about it. So for those that are unsure or unaware, can you firstly define what a treasury company is?
Yeah, so a crypto treasury company is a company that buys digital assets and puts them on their balance sheet. And they're often listed companies, and as a result of this, their share price correlates to the price of the underlying assets that they hold. Now, some of these treasury companies have cash flow, like MicroStrategy. They're doing $500 million of revenue a year, and they're putting their profits into Bitcoin, and that's one version. But then there's other versions where these shell companies, they just raise large sums of money, and they say that we're going to buy Bitcoin or Ethereum, put it on their balance sheet. And then it's their job to increase their crypto proportion per share, right? So get a return above and beyond denominated in digital assets on the shareholding of their investors. So that's quite different to an ETF.
And it started with strategy or MicroStrategy, but it's gone far beyond that. Give us a sense of like just how many companies are trying to play in this Treasury trend.
Yeah, I've spoken to some VCs and they're seeing hundreds of pitch decks go around.
Really?
Everyone wants to create a Bitcoin treasury. And what's different about these is that there's a lot more fees associated with it for investors, because you might have a management team that is putting this crypto to work to generate additional revenue for the business. So they might be lending it out, using derivatives, using decentralized finance to earn extra Bitcoins for their shareholders. There's such a variety here. Yeah.
We've seen Trump getting into it with Trump Media and Technology Group. Like, what's your view on what is happening in this space with these big guys coming in?
Yeah, so Trump Media's raised, I think, $2 billion for a Bitcoin treasury. They've deployed that. That's on their balance sheet. The thing is that Michael Saylor says that, holding cash as your reserves isn't that great an idea because it's eroding countries that can't help themselves. They're printing substantial amounts of money. I think the US added another $1 trillion of debt in the last couple of months. And what they're saying is that, hey, if you hold cash, it's just going to erode, your purchasing power is eroding. You might as well hold the hardest form of money, which they describe as Bitcoin.
Or reinvest it back into your business.
Yeah.
What, run a business profitably? That's such a quaint notion, Bryce.
Exactly. So, Michael Saylor says, all companies will end up having to be some sort of crypto treasury company if they want to protect, their assets. Yeah.
That's what he believes.
Yeah.
Well, I mean, of course he says that.
Yeah.
So that's what's happening. But like for the majority of us listening, we're not going to be listing crypto treasury companies anytime soon, although Bryce is floating a Fartcoin treasury company. So
nice. That's what I like to see.
The returns on that, wow.
But I think...
Blow your way.
Well said.
But I think, for most of us, we're just investors who are trying to figure out ways to invest in digital assets and not blow ourselves up. So putting your investor hat on, how do you think about investing in like a crypto treasury company relative to actually just investing in the digital assets, Bitcoin or Ethereum themselves?
Yeah, like I mentioned, firstly, it's fees. You want to make sure that the management team isn't taking massive cuts of performance, essentially. Secondly, you just want to make sure that they're big enough. I think the biggest crypto treasuries are going to survive. Because a lot of these guys are using leverage in some way or another, and that's fine in a bull market, but in a bear market, that could be very dangerous. And thirdly, you just want to look at their track record of increasing their proportion of crypto per share, which is their end goal, really. So that's the reason that you would hold a crypto treasury, is to increase your amount of crypto.
Yeah. Do you not worry that it introduces some level of systemic risk into the system? Like if they get bigger and bigger and they're all taking debt out in fiat and then buying crypto, you could see like a really bad unwind where all of a sudden the crypto price tanks, they can't service their debt, so they have to sell. That selling pressure then, forces more people to sell because they can't service their debt, and you could see the whole treasury trade unwind.
Absolutely. And I think it's already baked in, that will happen. This will turn into a bubble.
Wow.
Okay. There's going to be teams out there that don't manage their leverage correctly, and they over leverage and they will liquidate. And as a result of that, there'll be a bunch of learnings. There'll be new rules and regulations that get created to have boundaries around what these companies can and can't do. And then we'll move forward, and it'll be a different environment then. Yeah.
I love it. The crypto world is just a different world. It's like, it'll happen.
That'll happen, and then they'll regulate.
It's like the volatility is just a fact of life. So, Bryce and I had a bet. I said on a recent podcast that Bitcoin will fall 80%, and you were, I reckon it will fall 2/3 at some point. Who do you reckon's right?
I think it's going to do you reckon?
2/3 isn't 80%.
I know, but I reckon.
Now you're changing.
I'm being more reasonable. What do you reckon?
Like I mentioned, there's far more institutions now participating in the ecosystem, and I think the volatility is reducing over time. In previous bull markets, we've seen, 60, 70% drawdowns in a bull market. And in this market, I think the most that we've seen is 30, so I'd be surprised if we see, more than a 50% pullback in the next, bear market, which is great for investors.
Yeah. Back to the Treasury companies. Do you see this as long-term business models? Like, is it just speculative play?
Yep.
Does it sort of correlate with the cycle? How are you seeing it play out?
Yeah, I think that the ones that manage it really well are gonna be around forever.
We've just seen it with Bitmine,
Yep.
which are doing it in Ethereum. Do you expect that this approach will now start extending beyond just Bitcoin?
100%. And, different crypto assets on a balance sheet have different attributes. Ethereum has a native 3% yield if you stake it, which is great for investors because they can put that to work to, purchase more Ethereum, or they can return it through like a dividend, which is quite different to Bitcoin. And it gives some advantage to that. And I think we'll see treasury companies of all sorts of crypto assets, but you're just going up the risk curve, the more you go down the chart.
Yeah.
Final question for investors. It's, you've mentioned a few criteria to look for to separate a real deal treasury company from someone who's just capitalizing on the hype. One is the management team and how they're managing their debt loads. Like, can they service it? Is there a margin of safety in how much debt they're bringing out? Also, are they increasing crypto per share? Are they taking that digital asset and doing interesting things with it to grow shareholder value? Are there any other things we should be watching out for, either as red flags of things to avoid or as like green flags of things that look good?
Yeah, just really the track record of the team, seeing that they've managed, these sorts of things previously, or not these sorts of things, but, managed, large P&Ls previously and balance sheets and making sure that they know what they're doing, because there's a lot of people that, are looking to move into this space that have never done anything like this before. Haven't managed a large corporate treasury.
So let's turn to stablecoins, another sort of trend that we're seeing really start to play out. The US recently made moves to support stablecoin regulation with the Genius Act.
Yes.
So again, for those who aren't in the crypto world, what is the Genius Act? What was the law intended?
Sorry, before we even get to that, just quick 101, what is a stablecoin?
Yeah, a stablecoin is a digital token, and one token represents $1. And usually there's a US dollar in a bank account somewhere, either in the US or offshore, which means it's one-to-one backed. And this is quite different to, fractionalized banking that we have here in the traditional sense.
My favorite, I do TikTok investors every Friday, and my favorite ones that I come across every now and then are crypto influencers saying USDT is going to $10.
Crazy town. Yeah, USDT is a stable coin, backed one-to-one.
And so it will never go, it will always be one-to-one with US dollars.
Yes.
And so the utility for that is then...
Yeah, you can send it around the world instantaneously for cross-border payments or for paying for goods and services. And this is quite different to sending money through other means, which can take days and cost a lot more. So there is quite a lot of utility there. And as a result of that, we've seen, I think, $27 trillion of volume of payments over the past 12 months. And this is all before the legislation has been enacted, which we can get into.
Yeah, before we do, I think just to illustrate it for people, I remember seeing a video of Jack Dorsey explaining to the Square team, back when it was Square, around how they have had to go country by country, jurisdiction by jurisdiction, get banking licenses, get approvals, all of this stuff to roll out like Square payments in each country. And he just spoke about how different it would be in a crypto world where there was true cross-border payments, instant liquidity. And so technology like this, in theory, brings that world closer.
Yeah, that's exactly right. And, Telegram, for example, which is a messaging app with, a billion users or something like that, they have integrated stable coins. So at a click of a button, you can, instead of creating a bank account, you can now have your own kind of crypto account where you can send money all around the world. So it's just really streamlining and reducing the friction in order to people to send value to each other.
Who creates the stable coins?
Who creates it? There's different sorts of companies and there's different sorts of stable coins. At the moment, there's USDT, which was first created by Bitfinex, which is a large cryptocurrency exchange. And they realized that there was no trading pairs back in 2015 against Bitcoin. Bitcoin used to be the reserve currency in crypto, so you would trade all your other assets against Bitcoin, whereas they realized, we need another tool here, so they created stablecoins so you could trade all your other assets against USD.
Gotcha.
Yeah.
They make stupid amounts of money as well.
I was going to say, it feels like whoever controls that would just be...
It's like every time you buy a stable coin, they then buy the asset to keep it pegged, and then they just make money off that asset with like no real like cost of goods sold or anything. That's right, isn't it?
Yeah, that's right. So your USD Tether, they hold a couple $100 billion in a bank, and they're generating 3% yield and that 5% yield, and that's the revenue of the company. They don't pass that on to the customer. They just provide the technology layer, and as a result of this, Tether has under 200 staff. And I think I think they're making something like $80 million per staff member per year.
Wow.
So talk to us about the Genius Act then. What was it designed to do?
Yeah, so the Genius Act is a really important step in the adoption of stablecoins, not just in the US, but globally. And it sets some guardrails about what's kosher, what's good, what's not, with respect to how these should be structured. And the first and the biggest point is making sure that they're backed one-to-one, because you don't want to have a Ponzi or a fractional system. You want them backed one-to-one. And secondly, there's some rules and regulations about how these can be used. For example, money laundering, counterterrorism finance, making sure they're not going to people on OFAC lists, stuff like that. So just some basic stuff to regulate them. And this is really going to allow businesses to adopt them without the concern about the SEC or the CFTC taking the regulators taking them to court.
Just another step in crypto going from decentralized to centralized.
Well, soon
now you've got know your customer requirements.
Soon the Fed will have a stable coin.
Yeah.
Well, I mean, I think we'll get to that. I think a lot of these central banks are looking at CBDCs.
Yeah.
But before we do though, let's just hold on the 27 trillion. Like that is a huge amount of money.
Yes.
And we've kind of said it enables cross-border payments and cross-border transactions. Can you bring that to life with an example of with a real company or a real use case that you're seeing to really illustrate just something that is happening now that people may not be aware stablecoins are being utilized for?
Yeah, apart from crypto trading, a really great use case is for countries that have an instability in their monetary system. So their dollar might be hyperinflating and it becomes impractical to use. Those in those countries can easily create a crypto wallet in a matter of seconds on their mobile phone, and then start using USD stablecoin for commerce in their local areas. At no cost. They don't need to integrate to expensive banking systems. They have control, and it's ready to go. Out of the box. So that's a key. And then we see groups like Stripe, payment processors, PayPal, banks developing their own stable coins because they want to profit from the volume and the fees generated from having their own payment infrastructure in the form of stable coins. So we're going to see a lot more of that as well.
JP Morgan stablecoin.
JP Morgan. Everyone's going to try and make their own.
Well, let's drill into that. For people that don't really care about the crypto space or aren't really engaged in it, well,
I'm surprised they'd still be listening to this episode.
True, and have made it this far. Why should we care about stablecoins? Where will we see it starting to really shine through in our lives in the financial system?
Yeah, in Australia, we have a really great payment network. We have the MPP, new payments platform, where we can do OSCO or instant payments to one another. So we already have pretty low friction in our system, but there's a lot of countries that don't, right? But one really important way that we can utilize these that is quite different to traditionally how we manage our savings or our dollars is the programmability. So this hasn't come to light yet as much as we'd like to see, but you can create rules around how your money is used. For example, you automate the payment of your stable coins for different day-to-day use cases, right? So for example, you could lock up a bond with your landlord and have a rules-based system like that. It could be certain rules associated with invoicing or even paying tax. So that's the vision. But for now, it's primarily used just for payments from one person to another or in crypto trading. Yeah,
interesting.
When I think about it with my investor hat on, I think, all right, well, the first group of companies that would be at risk would be the remittance companies, like companies that try and facilitate those cross-border payments.
Yes.
The second one that I wonder about, which would be bigger, is how much does this put like MasterCard and Visa's monopolies at risk?
Yeah, well, they've really embraced the technology, and I think they're going to be releasing their own stablecoins to compete, because they do see as such an exciting
But if everyone has different stablecoins, does that mean are we as consumers going to have a whole range of different stablecoins?
Yeah, I think that's when the tech providers really need to get pretty smart with the user interfaces and have the ability for you to route your payment through a whole host of stable coins. There could be some smart swapping that happens in the background, or
I guess if they're all pegged 1-to-1 to, let's say, USD, it kind of feels like they'll all be pegged to USD, and that'll become more the global reserve currency. Then you don't need to have a whole lot, because you just swap them when you need it.
Yeah.
But what I mean is, if Visa's we're only accept all of our providers, you have to have a Visa stablecoin. If you don't have the Visa stablecoin, you can't transact through Visa network.
Yeah. But the transaction often happens at the point of purchase, doesn't it?
It depends. If the Visa card model, potentially, but others you could already be holding the stablecoin and then transfer it. Yeah. So there's so many different colors and types and attributes to stablecoins. Every one of them is different, to be honest. Different regulatory environment, different technical design, different user experience, and different risk profiles.
The nuts thing is that we're saying it's emerging, and all these companies that are experimenting with it, and there's $27 trillion worth that's already happening.
And it's just important to know that's pre-regulation. So the smaller banks are a little bit concerned about this as well, because particularly if customers end up getting a yield off their stable coins, really, why would you need a small bank when you could just manage it yourself?
So we flagged CBDCs earlier, so let's just close out the stablecoin conversation with that. Central bank digital currencies, they would be ones issued by the Reserve Bank of Australia. I feel like they got heaps of hype maybe 2 years ago. I'm hearing less about them now, but we're obviously not as in the space as you are. So what's the go there?
Yeah, there's still a bunch of pilots going on, testing different use cases. And I think that Trump has come out because he received lots of political donations from the crypto industry, and come out and said that the US won't be doing a CBDC. And that's really where this legislation, the Genius Act, came from, as a result of not wanting to have a government-managed central bank digital currency, but really creating some rules and regs for private industry to develop a quasi-version of that. And I think I was speaking to someone that was on the team, the DFRC, the Australian pilot for a CBDC, and they were saying that we would only really have to develop one if everyone else developed one, because then we would be behind the 8 ball. So if the US did develop a CBDC, everyone else would kind of have to do their own as well. But because they're not doing it, maybe there's less pressure for other countries to develop their own.
So to close out today, Blake, we want to have a look at the future. Beyond Treasury companies, beyond stablecoins, what is the next big thing? The next AI agent trading Twitter, beating fund managers?
Yeah, what will you be telling us about next time you're on?
Where's the hype at?
Well, it's really hard with crypto because these are general purpose computing systems. So new use cases can come to light in the matter of weeks and then gain billions of dollars of volume and market share in the matter of weeks and months. So if I did know what was coming next, I would think I would do a bit of a career change to VC.
Or just build it yourself.
Yeah. But there is something interesting that I think is bubbling and percolating under the periphery here, is nation states starting to buy Bitcoin. I think once they come to the realization that they can print money to buy Bitcoin.
Say the ultimate treasury companies. Treasury countries.
And there's really going to be a domino effect here. because, Bitcoin can't be inflated in the same way that fiat currencies are. And there's already rumors that there's, some large nation states doing this under the radar, because once they go public, it's going to be a crazy time. So I think this is one to watch out for.
It's incredibly irresponsible politically if you think about a political entity is meant to service the public, because they're deliberately inflating their currency that hurts their people to buy crypto.
Agree, but they could be in a position where they've done so much damage. This is, potentially one pathway out for them, or to
do more.
It should be more like Australia meaningfully taxes mining companies and uses that tax revenue to start a Bitcoin treasury.
Yeah, that sounds like a great plan to me. I'd vote for that.
Wow. So we've spoken about all this stuff happening. New business models, stable coins, and what that technology could mean. Let's bring it back again for investors, because at Bamboo you run a micro-investing platform for Bitcoin and Ethereum, also gold and silver, which have had very good runs recently. But you guys are all about slow and sensible dollar cost averaging. So how do we balance that message with what's going on in this space?
Yeah. It's so easy to come into this ecosystem and chase the shiny thing, the new and exciting thing. But often, these technologies are new and they go through multiple waves of innovation and cycles in order to reach maturity. But, when you ask someone, what did you wish you did when you came into the crypto ecosystem? And everyone always says, just buy Bitcoin, Ethereum, just DCA. It's simple, it works, and there's relatively much less risk than chasing some of these narratives. And that's why we built the Bamboo app, to help everyday people participate in the ecosystem as safely as possible.
Love it.
Yeah, build wealth sensibly and then just enjoy the show.
Yeah.
So Blake, if you had one bold prediction to close out, for where crypto will be, or for what's going to happen in crypto in the next 12 months, what would it be?
Yeah. Well, hopefully we see, 200,000 USD
200
Bitcoin. Wow. That's what we'd all love to see. And $10,000 Ethereum. So
10,000?
Yeah.
Ethereum's been a bit of a slower mover this time, hasn't it?
That's right. Ethereum has lagged this cycle. I think the whole time that Craig was on the Crypto Curious podcast, Ethereum was in a technical bear market.
and he's a big
his largest holding.
So
that was quite funny. Now, I think the week that he left the podcast, Ethereum broke its all-time high. So I think it was just
read into that what you will.
Well, look, if you want to get started investing in crypto, check out the Bamboo app, download it on the App Store, or head to the website. And if you want to keep up to date with what's happening in the crypto world, Blake and the team do a weekly podcast, Crypto Curious, so plenty of crypto content to keep you going. But Blake, we appreciate you jumping on and telling us what's going on the front lines of the crypto world.
Thank you so much, guys. Great to be here.
Thanks, Blake.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.